happy Friday. A nice note, if you like, to finish on a positive.
It's wonderful to finish on a positive ahead of a long weekend, and I guess that really dominated the market today. The fact that the Australian market will be closed for 3 days because of the Queen's birthday long weekend. So if we have a look at volumes, anemic on the market today, less than $4 billion worth being traded. And if we have a look at how trades occurred, well, we did see a lot of profit taking in terms of short positions ahead of this long weekend, and of course this big correction that we've seen over the last 9 weeks. So while the market was up by 0.3%, unfortunately sentiment not too strong. Every time the market tried to rally, we saw a selling into those rallies. But almost all sectors were higher today, with the exception of the telecom and the property sector. I guess the best were the information technology, consumer staples, as well as the material space. But if we have a look at the market and where we're at the moment, let me just have a look at a longer term chart. This is over a 3-year period, and you can see where we're coming up to at the moment. That 4,500 point mark is an area that makes a lot of traders nervous. We've hit it many times in the past before. We're coming up to it now. So I'd say that a lot of traders would be quite cautious in that 4,500 point area.
Futures, the US futures, a little bit of a slide in terms of that bounce we saw overnight on Wall Street. Could it be potentially short-lived?
We have a look at the US market coming up to some important technical levels as well. I guess the worrying move about the US is while we saw a move up in the US market, we actually saw volumes collapsing once again. So in terms of sentiment, that isn't a strong signal to the market. And in fact, if you have a look at the US correction, the US market's only down 3.5% since its last high. But if we have a look at the Australian market, our correction now 9.2%, and the Shanghai Composite, it's even worse there. The Australian market does seem to be taking more of its cue from the Shanghai Composite. If you have a look at the performance in the year to date, even the last 52 weeks, we have much more similarities with how China's trading rather than how the US is trading. So if we have a look at the Shanghai Composite, I guess we saw an important level being breached today. This is the Shanghai Composite over the last year. 2,700 points has been an important level. It's been a ceiling on the way up, and on the way down it's been a key support level. Unfortunately today we've seen a break of that 2,700 points. So I think the Shanghai Composite at the moment is at 2,680 points. So potentially pointing to some more weakness in terms of the Chinese market, which could be a negative for the Australian market. I guess the positive for the Australian market is that 4,500 point level, because it has been such a strong area in the past. We're going to see a lot of traders too cautious to put on short positions as long as we're hovering around that 4,500 point level. The key here is 4,477 points. This has been the low for the year so far. If we break this, then we could see more traders coming on in terms of short positions, a much more bearish mood prevailing. But without any more new bad news on the market, we could see a bounce next week, but really it's just a stage of consolidation. We're not going to see any huge rallies up to that 5,000 point level.
Was on the Australian market. Julia Lee, winners and losers, did anything stand out?
I guess this was the third consecutive week of losses for the Aussie share market, but if we have a look at the sectors which impacted on our market, energy was very much in focus, down by 2.8%, and consumer discretionary, once again, big falls there, down by 2.1%. In fact, if we focus in on that consumer discretionary sector, it's now been the 7th consecutive weeks of losses. This week, in terms of that discretionary sector, we did see the relative strength index hitting a low of 25 points, so into oversold territory. So we could be looking at a bounce here for the discretionary sector. In fact, in the last 2 sessions, we have seen a little bit of a bounce. A lot of people will be hoping that this is forming a base, but I guess we'll be looking for an uptrend to develop before getting in on this trade. In terms of the week that was, you know, we did see the ban on the live exports to Indonesia, so stocks like Elders as well as Australian Agricultural Co were very much in focus. We did see some takeover activity in terms of Territory Resources and Noble Group. It was also a week where we saw Tabcorp trading for the first time as the demerged entity. So that was interesting to see. A lot of attention on that in the beginning of the week, which started to fade in terms of performance towards the end. And of course, if we have a look at the best performing stock, it's great to see Sigma Pharmaceuticals finally seeing some gains on the back of a brighter outlook statement that came through from its AGM. The stock up by 19%, making it one of the best in the top 200 this week.